Hello Cryptoverse and welcome to the Crypto Chronicle where we accumulate Bitcoin and it's gone. I'm your host Misho and let's get started with this week's show. SaveDroid, a German fintech company that specializes in AI technology used for crypto savings and investments, completed their $50 million ICO at the end of last March. This week, however, the website just suddenly changed into the South Park meme and it's gone. Then after, the founder and CEO Yassine Hanker tweeted out a picture of himself on a beach drinking an Egyptian beer and saying, "Thanks guys, over and out." The investors in this ICO were livid. They thought he ran away with $50 million on a beach having fun. But then the website suddenly came back on Thursday online with a published video from Hanker titled, "And It's Not Gone." Take a look.
We wanted to send this very drastic message by just saying, look, how easy could it have been that even we as a highly regulated German stock corporation could just have run away, done an exit scam with all the funds, leaving all the investors just behind, losing up. But of course we have not done that. We just wanted to convey that message.
I'm all for a great prank, but you cannot play with people's money, man. It will always backfire. This CEO tried to teach a lesson about exit scams, but I think the only thing he's gonna get out of this is a lot of pissed off investors and just bad sentiment around his company, so it was definitely not worth the trouble. The New York Attorney General has launched an investigation into 13 major cryptocurrency exchanges trading Bitcoin and other digital currencies. These include Coinbase, Gemini, Kraken, etc. The Attorney General sent a questionnaire to each exchange to request information about trading policies and procedures, basic operation and fees, as well as controls for money laundering and hacks. These are voluntary requests, and even Kraken already responded and said they're not going to participate. This comes days after the International Monetary Fund, IMF's chief, Christine Lagarde, actually put out a statement saying that she wants an even-handed approach to regulation in the digital currency space. I expect this back and forth about regulation and pushback to keep going until we find this middle ground that everybody's happy with. In arrest this week, Renwick Hadow, a British citizen and alleged Bitcoin fraudster, has been extradited from Morocco to the US and appeared in a Manhattan district court. The Department of Justice complaint alleged that Hadow misappropriated investor funds in projects like Bitcoin Story, which was apparently a crypto exchange but never really became live. Hadow was taken into police custody in Tangiers last July after Interpol issued a warrant for his arrest. This world is full of scams like this and people like this, so hopefully news about extradition and big arrests like this can deter people from doing this. This week saw the end of tax season here in the US, and there were several reports conveying that less than 100 people have reported capital gains on their tax filings. These are reports based on data released by Credit Karma out of the 250,000 tax filers through their platform. As the IRS pointed out in 2014, cryptocurrencies in the US are classified as property. And because of this, the purchase, sale, trade, and mining of any digital currencies are considered taxable events. This figure of 100 people is not that far off from what we saw in 2015 when only 802 people reported capital gains. And as we reported before on the show, we were expecting $25 billion in taxes this year, and this might be the reason why the Bitcoin price has crashed. But this discrepancy can't really be resolved except for maybe one thing, that really people involved in crypto investments just have a really high tolerance for risk. And so they just might be waiting to see what the IRS is gonna do. Now let's go on to our main story. There are several crypto evangelists on YouTube and Twitter, and one of the most popular is Ian Balina. On his YouTube channel, he regularly reviews upcoming ICOs and hosts AMAs to answer audience questions about these ICOs. One thing that really stands him apart from the rest of the pack is that he posts on Instagram and Twitter a daily portfolio of his real crypto assets and their entire value. So it really grew into prominence last year when people saw that from his $90,000 in investments, he turned that into $4 million. So at around 4 a.m. Eastern this week on April 16th, Ian was in the middle of one of his standard live streams when a commenter wrote, "Ian, did you know that somebody transferred all your tokens from your account?" Shortly after the live stream went black, and Balina later tried to explain how he believes he was hacked. My college email was listed as a recovery email to my Gmail. I remember getting an email about it being compromised and tried to follow up with my college security to get it resolved, but wasn't able to get it handled in a fast manner and gave up on it thinking it was just an old email. I keep text versions of my private keys stored in my Evernote as encrypted text files with passwords. I think they hacked my email using my college email and then hacked my Evernote. With $2 million worth of crypto gone from his wallet, Balina claimed he was hacked and tweeted out for support in finding the purported hackers, as you see now. The crypto community is really divided if they really believe that this was a legitimate hack or if this was a way to evade taxes in the US, but I'm not here to put my stake in this debate at all. However, there are many key takeaways from this story. 1. Let's be humble, folks. I get very happy when I see investors doing well in the crypto space, but come on, we don't walk around in our neighborhoods yelling out, "Hey, in my Bank of America account, I got $20 million. No, so we shouldn't do that with our crypto portfolios either. You will become a target. 2, use cold storage for your core portfolio. Forking over $60 to $150 for hardware wallets like a Ledger Nano or Trezor is paramount when you have crypto that's worth more than a month's worth of salary. They may not be 100% foolproof, and there's a lot of reports out there that show this, but it's still, when you're managing private keys on a cloud server and hot wallets, those are much more easily targeted. 3, beware of phishing scams online. Hey guys, if you send me 0.2 Ether today, I will return it at 2 Ether to you to the same account you sent it from. Thanks at Vitalik Buterin, who has 2 followers on Twitter and a crappy profile picture. Yeah, those scams are all over Twitter. And even earlier this year, one of those fake Twitter accounts got verified by Twitter. It was a Tron account, and they had 140,000 followers and had these scam giveaways all over until it was shut down. Then lastly, 4, 2-factor authentication is key. For the love of all that is good in the world, turn on 2-factor authentication on all your crypto exchanges and logins and everywhere you can. You should use apps like Google Authenticator or Authy because SMS 2-factor authentication is actually not as secure. Security experts have shown that hackers have previously orchestrated large-scale attacks where they exploited known flaws in various cell networks in order to interpret text messages sent to users. Since the hack took place, Balina has stated that he's currently working with authorities and an official criminal investigation is taking place to find the hackers. If things like this are happening to seasoned crypto investors, what does that really mean for the larger market as a whole? The bad news is it's hard to expect the mainstream public is going to jump through all these hoops just to keep their crypto safe. When you deposit money in a bank account, there's a certain level of security you expect. You don't expect some random hacker to just be able to steal your money from your bank account. So that's the bad news. The good news, however, is that on that same note, once these security measures are in place, and there are several companies now that are trying to work on this and create an easier process, the masses will jump in. So to me, this provides more evidence that we really are still early in the Bitcoin and crypto life cycle and still in that early adoption phase. So hodl on, my friends. Now for down the line. Vice caught up with founder of Ethereum, Vitalik Buterin, this week, and I recommend watching it if for nothing else but this quote from him where he referred to himself as destroyer of jobs, creator of better ones. Game of Thrones, you gotta come back. We miss you. There's a new crypto exchange called Upcoin that is expected to launch on the 23rd. I don't recommend jumping in and signing up right away, but to keep an eye on it and see how the market really reacts to this and if they really accumulate a large user base. The advantage that this exchange claims that they have is that they have the ability to process over 5 million transactions per second. They plan to have their own token, just like BNB for Binance. So we'll see where this goes. All right, there you go, folks. Thank you all for joining us this week. Subscribe to the channel to remain up to date on the cryptoverse. Join the conversation on Telegram and Twitter as you see below. This has been the Crypto Chronicle. My name is Misho, and I want to help you make smart whale money.